The end is in sight for asset purchasing as Fed Chairman Ben Bernanke outlined the timeline for tapering the stimulus measure at yesterday's US FOMC monetary announcement. But what have the markets seen since then? Gennadiy Goldberg of TD Securities in New York joins me now. Gennadiy, is it fair to say that the financial community were disappointed by a dovish Mr. Bernanke at yesterday's press conference?
I think it was actually more a factor of them being disappointed by the fact that Bernanke didn't really back off of the tapering theme that he brought up in his earlier testimony. Essentially, what the market is seeing right now is so to speak, the end game for Fed easing. And that isn't exactly accurate, and I believe that that's why the market reacted the way it did. Essentially, the market sees the Fed exiting at this point, and that's not quite correct. Bernanke made a very good point in saying that tapering is not tightening, and we are going to have quite a bit more buying or Fed stimulus to come, before the Fed is out of the market. Our current estimates put the amount of securities that they'll still purchase at about $800 billion. So that's quite a bit for the market to digest, and I think that once the markets realize that the Fed is nowhere near exiting easing, we will see a bit of a retracement move.
So what next then? We've received the all-important timeline for the tapering of asset purchases, which is expected to take place this year and halted altogether in 2014 should the economy perform in line. What indicators will the Fed, as well as the markets, now be concentrating on as measures of the feasibility of this plan? And similarly, just how flexible do you think the Fed are willing to be with this time frame?
Well, I think the burden of proof at this point is to sort of drive the Fed away from tapering. I think the default future, so to speak, for the Fed is to actually taper rather than not taper. So I think what they will be looking at right now is how payrolls perform, how economic growth performs in the second half of the year, and we are looking for a bit of a pickup. We're looking for job growth, especially, to perform quite well, and I think that will give the Fed enough room, along with the stop in the bleed lower in inflation pressures, to begin tapering at the end of this year. We're currently looking for them to announce tapering in September and to actually begin the first taper in October.
Now, as to market response, gold fell, Japan and Australian equity futures followed US stocks lower, and over in the currency markets, the Aussie dollar sank to a 2.5-year low, the Indian rupee dropped to an all-time low against the US dollar. Who has been the biggest loser out of this, and will this response be a short-term bounce, or are the coming weeks set to put the markets on edge?
Well, I think the only one of the few assets in the world that's actually up at this point is the U.S. dollar, and that's rallied quite a bit. Everything else fell. We saw a large rise in yields. We saw a large fall in stocks. At this point, I think the market's trying to understand exactly what's happening, and I think once they do, we will see a bit of a retracement. So I don't believe that this is the beginning of a long-term trend. The Fed continues to ease, and there's still plenty of stimulus to go around. I think once the market gets over the short-term response, there will be a bit more buying on the edges, and the markets will firm up a bit.
President Obama hinted this week that Fed Chairman Ben Bernanke will be retiring at the end of this year. Markets are now abuzz with names for a potential successor, but who's your pick?
Well, Janet Yellen is currently the favorite. I believe that she will probably be the first in line to be picked if he does, in fact, announce his retirement. I think it's a little too early to say. I don't think anything's been quite firmed up yet, and Chairman Bernanke was correct to sort of brush off that question during his Q&A session, mostly because they want to ensure as much continuity at the Fed as possible, and speculating on potential successors isn't very continuous. I think while Yellen is actually still the favorite, I think we might actually be surprised by whoever the final pick is. It doesn't necessarily have to be someone that the market particularly loves at this minute.
Gennadiy, thank you. For a closer look at the performance of gold, click back to our Commodities Corner program for an in-depth look at the precious metal with Dukascopy TV journalist Dylan McDermott. Goodbye for now.